All right, let's jump right in. Today, we're digging into the National Bank of Romania's latest financial stability report for 2024. And honestly, it's a really fascinating read. It tells this story of surprising strength, even when facing some major headwinds. So, let's get into it.
So, right off the bat, the report gives us its main conclusion. The big message from the National Bank is all about resilience. Despite everything the world's been throwing at it lately, Romania's financial system has really held its ground. It's shown this incredible ability to absorb one shock after another.
But, of course, that's the big question, isn't it? Resilience is great, but it's never the whole picture. This report isn't just a pat on the back, it's also kind of a warning. So, for the next few minutes, we're going to explore that duality, this really solid surface, and the potential risks that are lurking just underneath.
Okay, so let's set the scene here. We're looking at a financial system that has been seriously stress-tested in the real world, not just in some computer simulation. This isn't a theoretical kind of resilience. It's the real deal, proven under some intense pressure.
Now, what's really wild when you look at this is just the sheer variety and the non-stop nature of these shocks. I mean, we're talking about a global pandemic that basically shut down the world, a major war right on the border that kicked off an energy crisis, some serious wobbles in the international banking system, and, ongoing geopolitical chaos. And through all of that, the Romanian financial system didn't break.
But that resilience is definitely being tested. The National Bank isn't just looking in the rearview mirror. It's pointing out the clear and present dangers for the road ahead, and they've pretty much boiled it down to four main risks we really need to keep a close eye on.
And here they are. You've got the external stuff, like global conflicts, which are totally unpredictable. Then you have the pressures from inside the economy. There's that classic risk that people and companies just can't pay back their loans. And of course, the ever-present modern threat of cyber attacks. Let's start by digging into those internal tensions.
So this is a major point of concern for the National Bank. Romania is dealing with what are called twin deficits. Just think of it like this. As a country, you're spending more than you're earning, both internally with the government budget and externally with trade. At negative 6.6% of GDP, the budget deficit is one of the highest in the entire EU. And the current account deficit? At negative 7%, it's the second highest. This isn't just a temporary problem. It's a persistent vulnerability that puts constant pressure on the economy.
And that leads us to another internal risk, which is perfectly captured by this one stark number. The National Recovery and Resilience Plan, the PNRR, is this massive pile of EU money meant to spark investment. But so far, only 6.7% of it has actually been spent. These delays mean that big economic boost everyone was expecting just isn't happening, which of course puts even more strain on that budget deficit we just talked about.
Okay, so with those risks swirling around, let's pivot to the heart of the financial system, the banks. The report pretty much paints them as a fortress. But, how solid are those walls, really?
While the data here speaks for itself, and it's incredibly clear. Let's look at solvency. That's the bank's cushion to absorb losses. Romanian banks are sitting at 22.9%, which is well above the EU average. Now look at liquidity, the cash they have on hand. It's a massive 286%, which just blows the EU average out of the water. Yeah, the rate of bad loans is a tiny bit higher, but it's still incredibly low at just 2.4%. So, the bottom line is this, and it's a crucial point. The core of Romania's financial system is exceptionally solid. The banks have bigger cushions and way more cash on hand than their typical European counterparts. This is a huge reason for that overall resilience the report keeps highlighting. Okay, so let's move out from that banking fortress and see what's happening in the real economy. How are the actual households and companies, the ones borrowing and spending, doing? This is where we can really feel the daily economic pulse. For regular people, it's kind of a tale of two cities. Mortgage loans look really safe, with a non-performing loan rate of only 1.7%. It shows people are making their house payments a top priority. But look at consumer loans. The default there jumps all the way to 5.9%. This is where you can see the squeeze from inflation and higher interest rates really hitting home.
Now for the companies, there's this really unique and critical vulnerability in the Romanian economy that we have to talk about. It's called commercial credit. This isn't a bank loan, it's just companies paying their suppliers late, and in doing so, they're basically using them as a bank. It's a massive part of how business gets done, but it's packed with hidden dangers.
And the story of this commercial credit really comes in three parts. First up, Romania is number one. Number one in the entire European Union for how much its businesses rely on this kind of financing.
More than anywhere else, companies depend on pushing back payments to manage their cash. Second, this creates a huge logjam. The average time it takes for a company to actually get paid is 85 days. That's nearly 3 months. Compare that to the EU average of just 55 days. These huge delays can cause cash flow nightmares that ripple through the whole economy. And third, here's the real kicker. The risk of default on this kind of credit is 4 times higher than on a normal bank loan. So let that sink in for a second. The most common form of business financing in the country is also one of the absolute riskiest. You can easily see how one big company failing to pay its bills could set off a massive, dangerous domino effect. This heavy reliance on commercial credit is really a symptom of deeper, long-term problems. So while that banking fortress looks solid, the report is basically saying there are some serious structural cracks in the wider economic foundation that really need some attention.
This slide right here is just wow. It's stunning. Financial intermediation is just a fancy way of measuring how big the financial sector is compared to the whole economy. In Romania, it's just under 50% of GDP. Now look at Poland, a regional peer, at almost 90%. And the EU average? A mind-boggling 220%. This shows that Romania's financial system is just significantly underdeveloped, which helps explain why companies turn to risky commercial credit instead of more stable financing from banks.
And the cracks don't stop there. Almost a third of all companies are fragile and don't have enough capital. Then you add the demographic challenges of an aging population and a skill shortage, plus the huge challenges of climate risk and getting digitalization right. These are all long-term problems that just make any short-term shock feel that much worse. So when you put it all together, what's the final picture? The National Bank's report gives us this really clear-eyed view of both the strengths and the very significant challenges that lie ahead.
And that's really the thought I want to leave you with. What this look at the report shows us is a country with an impressively resilient financial core, a real fortress. But it's a fortress built on a foundation that has some very visible cracks, those twin deficits, the deep reliance on risky commercial credit, and a financial system that's just too small for the economy's needs. The big question for the future is, how do you fix that foundation without losing the very resilience that has served the country so well?